Hello, hello. Assalamualaikum.
Waalaikumsalam.
Okay. Sorry, we opened the wrong Zoom room, so it's a little bit delayed. Okay, let me enter the rest. Bismillah. It's Adil. Cool. Okay. I'm gonna make you the co-host, so later you can help me make Zalifa the co-host also.
No worries. I will be sharing the screen again.
Oh, okay. Then I make you the co-host, then you can share the screen.
Yeah.
Hello. Hey, sorry, I started the wrong room. My God.
Okay. It's okay, man.
Okay. Luckily, it's not too late.
Yeah.
I think why got no one coming? Is it everybody late? Okay. I'm going to share screen and play some music. Then we will start in a few minutes, maybe 7:40.
Start in 7:40. Yeah.
Okay.
Yeah.
So I'm going to play some music first. Hari Raya background music. Okay. Everybody.
Okay. Hello everyone, good evening. We're going to start the talk in 2 minutes. So just hold on and just settle down and just relax. Okay, hello everyone. Assalamualaikum to our Muslim brothers and sisters, and also a very good evening to our non-Muslim brothers and sisters who are joining us today for this talk. So we thank you again for signing up and participating in our second talk, which was voted as one of the most sought out in our summer program, which is called Let's Talk Investment. Now, my name is Adil, and I will be your host for today. Now, Let's Talk Investment is where we will be discussing the basics of investing, such as the products and the platforms available, while diving into the Sharia compliant aspects on investing and its principle for tertiary students from the perspective of both professional practitioners and from the perspective of our student body as well. So before we begin, I would just like to invite our Muslim brothers and sisters in the recitation of Surah Al-Fatiha in the hopes of attaining the blessings of Allah Subhanahu wa Ta'ala for our event for today. Okay, thank you so much. So before we begin, I'd just like to, the agenda for the night is in the next slide shown. All right, so yeah, we'll be ending off the whole event with a Q&A with the Slido link, which is shown in the next slide. Right, so you can just go to slido.com and put in this code in the website, which is LPI21. So yes, and during the talk, you can just ask the questions in the Slido link. So now some background information before I introduce our speakers is that SMU Islamic Business and Finance Society is a student-initiated wing constituted under the SMU Muslim Society with a vision to cultivate and promote the growing interest in the fields of Islamic business, law, economics, and other faculties of studies among the student population in SMU and other tertiary institutions within Singapore. Now it aims to serve as a platform for students with an inquiring mind and common interest in the field of Islam and business studies to get together, explore the vast potential and possibilities in this area, and subsequently form an appreciation and understanding of Islamic traditions pertaining to business and finance. Now, why we have decided to organize an event addressing these topics today is because there is a rising trend to get into investing in our Muslim youth community to build a better future of ourselves. Now, we expect much interest, however, the differences in approach between non-Muslims and Muslims towards investing and personal finance can be a crucial factor as to why some of us will start investing. So at the same time, many questions and doubts arise that cause many of us to hold back from even starting to invest. So tonight we aim to adequately prepare our community by providing them with a talk on these topics by Abang Insurance, also known as Mohammad Murtadha, a registered financial advisor with Manulife, and the Lepak Finance, a student-initiated educational brand that shares practical insights on investing and personal finance with the SME community. Now, Murtadha is a full-time student in Madrasah Wan Tonja, and he pursued his studies in University Malaya upon completion of his E-levels and acting as the first Singaporean cohort to graduate with a bachelor's degree in Islamic finance and banking in early 2016. Now, he was also currently serving as a go-to Islamic financial advisor under the umbrella of Manulife. Next slide. So I think Daniel is a familiar face from our last talk. So he started the Lepak Finance in June 2020 as a passion project, and he talks about personal finance such as investing and ways to improve money management. And he also founded the Telegram group, Ashik Duitja, with over 750 members, hoping to build knowledge about financial literacy. And he is also an SMU undergrad in economics with a second major in finance. And he also has 4 years of investing experience and mentored friends to start their investments journey. Now, without further ado, I'll pass our time to our first speaker, Mohammad Danial from the Lepak Finance.
Okay. Hi everyone. Assalamualaikum. I'm really happy to see so many faces today. Some very familiar ones from my friends, others from my past, whether in NS or etc. Even some family members. So thank you for coming down, and hopefully today I will be bringing you guys some fresh insights on how to start investing, especially from a beginner's perspective. All right. Can you guys see my screen, Adil?
Yes, we can.
Bismillahirrahmanirrahim. All right, so today I will be giving a small but short but quick crash course on investments. And for those of you who might be lagging behind in the content, don't worry. These slides I think will be sent out, and the session will be recorded. So there's no need to worry. If there's any other questions, we will try and answer them towards the end of the day today, where we will have a Q&A session. All right. So first, to understand investments, we need to understand what is investing in itself. So for most people, they think of it as just like, stocks, forex, or cryptocurrency or whatnot. But I want to break it down to make it simple for everybody. What investments is basically it's trying to buy assets that can bring you a return in the future, or in some sense, you're taking some a risk in order to get some return for the future. So some of the more common ways you will imagine people investing is usually like gold, real estate, stocks, art, etc. These are the most common forms of investing that you will probably hear of, but probably do not have a clearer picture of what is exactly investing. All right, so why do we need to invest? I am pretty sure many people here, especially those financial advisors or people who understand finance, money, will understand why. But for the benefit of those who don't, investing is more important for our future. For one thing, when we grow into retirement or when we hit a certain point where we want to, stop working, we need to still have income to supplement our daily needs. We need to, take care of our health, to pay for our own bills, our transportation bills, food. All of this requires money, and sometimes it's sad to see when we see an old uncle still working at the age of like 80, or old auntie still doing cleaning work at age of 80 plus, just trying to get by with life. And these are just some of the key examples that we see highlighted in the news. And the reality is not really that far lah. When we go to kopitiam, we see this is actually the case. And what Singapore has found out, that this was done based on a study a few years ago, was that on average for a retiree to enjoy the basic needs, you will need at least 1,400 a month of money that's coming into you. And when you're not working, $1,400 a month is actually quite a large amount. You can think of it as 1 year you will need at least about 18 to 20,000, and this is not accounting for the next thing, which is inflation. And the second reason why we why we need to invest is because savings alone cannot grow our wealth. When you think of savings account, even those higher yield ones, they're only getting maximum 2% or 1.5% on your returns, and that's also inclusive of riba, which will later be covered by Murtadha. And this is not enough to grow our wealth. Why? Because inflation alone is actually growing at about 2.5 to 3% every year. And in recent COVID times, we have seen inflation reach at least 4 or even 5%, which means that if you keep your money in your bank account and you are earning like what most bank accounts earn, like less than 0.5%, and your purchasing power is constantly falling by 5%, you are definitely going to be losing money in the long run. Albeit while I say that, savings is actually quite important for the near term. When you in case you lose a job or what, you still need some money to sustain. So saving does have its role, but investing is also very important to sustain long-term growth. Right. So why do I say that? Because if you don't.
Hi Daniel. I think the screen sharing has stopped. Can you just share the screen?
Okay. Apologies. Because I thought I was still sharing. All right. Can you guys still see the screen? Is it screen sharing?
Yeah, you can see.
Okay. So was this slide shown? No.
Or it wasn't shown just now.
Okay, so it wasn't shown. Yeah. So basically, if you save your money in the bank, it's just not earning enough returns to compensate for the rise in living costs lah. Basically, you still live the same lifestyle, but it's just getting more expensive, and your saving is not going to cut it. So yeah, investing is important because if you don't find a way to make money while you sleep, you will work until you die. And that was the clear case when we saw the 82-year-old cleaner who had to work just to take care of his wife. Okay. So now we bring on a bit deeper into what types of assets are available, or what do people normally talk about when they see investing. So there are commonly 8 different types of asset classes. Whether you invest through a financial advisor, a robo-advisor, or even you do it yourself, you will probably be invested in one of these 8 classes. So the first one is collectibles, things like you can imagine like your Pokemon cards, your art, all of those rare items or antiques. These fall under the category of collectibles. So they gain in value as they become more rare. The second category is real estate. So you can imagine this as you are owning a second property and you are generating some form of rental income, or you're hoping to sell the real estate property in the future at a much higher price. The third group of asset classes is called equities. So you can imagine this as what people call stocks. or unit trusts, mutual funds. Usually they will invest in this thing called equity, which is basically ownership in a business. Even if you own your own business, that's called private equity. So this is a form of mostly manifested in the form of stock investing. The fourth category is bonds and sukuks. So there's a slight differentiation here. If you can see, I put red and green. So the reason why I put red and green is because there is a slight differentiation which we will later perhaps cover in the Q&A session. So bonds are essentially conventional loans. So you can imagine if a company needs money, they will ask for a loan, and then in the future they will pay back in the form of interest payments or coupon payments, and they will repay back the full sum at the end of the deal. Whereas sukuks are Islamic loans. So they have to meet some form of Sharia compliance in order for the loan to be classified as sukuk, which is investable by Islamic Muslim investors. The fifth group is known as commodities. So things that you can imagine are commodities are like your gold, your silver, oil. All of these are known as commoditized products, which you can buy and sell in terms of physical components. The sixth group of asset classes is rather new, and I'm pretty sure a lot of people have heard of it. It's known as cryptocurrency. Things you hear of as Bitcoin, Ethereum, etc., etc. So these are very new asset class, and they are very unique in the sense that they are purely digital, they are decentralized, and most of them at least are decentralized, and they have some unique features that modern day currency don't. The seventh group is known as foreign exchange. And again, I put here green and red is because there is some differentiation between forex trading, online forex trading, and the typical foreign exchange that we see on a daily basis when you go to the money changer to exchange. So this is another way that people do invest, but later we can talk about the distinctions between the online and the physical version. The last category of asset classes will be your derivatives. So you will think of derivatives as something like a contract, as maybe some of you have seen on YouTube advertisements as those options trading, CFD trading. These all categorized and fall under the umbrella of derivatives. So there are so many different asset classes here for us as investors. But yeah, for the Muslims, majority of the compliant asset classes will mainly fall under equities, sukuk, and in my opinion, at least cryptocurrency. All right, so what are the ways to invest, especially for new people? I always get this question that, oh, okay, how do I get started with investing? What are the ways for me to invest as a beginner? So you can look at it as two ways that you can do things. You can do things in a more passive way. That means you take a more hands-off strategy. You don't really manage it too much, and it's a very easy way for beginners to start investing. The idea here is you will either leave your money with a robo-advisor, or even you buy diversified funds instead of picking individual securities, or just to make it simple, stocks. So the point here is you're trying to keep investing as hands-off as possible. You don't want to take your time to stare at the screen, like what you normally imagine investing or to be. The key here with passive investing is that you need to take a bit of a longer time to see meaningful returns. If, for example, I do passive investing in stocks, I should expect to see about 10% or 10 to 15% on average return every year over perhaps 20 years or maybe 15 years. You will need a longer time horizon for a passive strategy. An active strategy will more entail of picking individual stocks. Perhaps you imagine people buying Bitcoin. These are all forms of active investing strategies. Even investing with your financial advisor is actually an active investment strategy, because you are still getting someone to pick stocks or pick funds for you. So it's still active. The key here is that research is required when you want to pick a fund or when you want to pick a stock. So the risk here is much higher, and the fact that the risk is much higher, there is also a shorter time period to see meaningful returns. That's why you see some people when they buy Bitcoin, they can suddenly make a lot of money within a short time period. Okay, the risk here is much higher, but they are compensated with some returns. At the same time, when we say that, when the risk is higher, the chances of a loss is also higher. Okay, the fact that you have to take on unforeseen circumstances, for example, a company suddenly goes bankrupt because of certain reasons, or maybe they are caught out in a fraud. it's much harder to defend yourself against this sort of risk if you're doing active investing as compared to passive investing. But there is still ways in order to protect yourself against such risks. Right. So now that we have clarified what are the two methods in which a person can do investing, how do they actually make money? So most people are confused as where does the money come from? Does it come from thin air? How do people get rich? There are mainly two ways, especially in stocks. So the first way is called capital appreciation. What this entails is that you're going to be buying an asset. So for example, you're going to buy a stock or a cryptocurrency or fund or real estate at a price. And then you're going to hope, or not say hope, but you're going to sell it at a higher price in the future if the asset appreciates. So usually this will come when businesses or industry grows, or if there's a drop in supply due to perhaps rarity lah. You can think of it like how collectible Pokemon cards can become like $200, $300, like just in the span of a few years, just because it becomes a rare and desirable card. So this is a form of capital appreciation. The second form of earning money, at least through stocks, is called dividends. What this entails is that you're getting some form of quarterly repayments made by companies. So these are all non-guaranteed quarterly repayments. They come out as part of the company's profit. So you can think of it as like a reward to investors for staying with the company and investing their money, and they will generate a form of passive income because you're just leaving your money in that company for a return. So it's very hands-off in that sense. Okay, so now we have talked about how to make money and what is investing and all of that. Now we want to touch a bit on the risk side, especially for beginners. They always think of investing as too risky. There's a chance I lose everything. So there's a chance you can always lose anything. Like for example, if I leave my money in the bank, there's still the chance that the bank can go bankrupt, or that economies can turn around and you can lose your job. There's always risk in anything you do. What's more important is how to manage risk. In investing, there are multiple ways to manage risk. So today I'll be covering two. The first one is diversification. So what diversification entails is when you buy an investment or when you buy a stock, you're owning just one stock and your risk is just exposed to one stock or one fund, etc. The key idea with diversification here is spreading your risk. So you own different types of asset classes. Maybe you can hold a stock portfolio, but you can own different types of stocks. On top of that, you can own gold, you can own sukuks, you can own different types of assets, and you can even buy assets from different countries. You can buy a Singapore stock, a US stock, and you can even buy them at different times. This will allow you to spread the risk. If one fails, you don't lose your entire portfolio. And because of that, the risk of losing your entire capital is lowered. You can also lower the volatility. Sometimes assets such as cryptocurrency, they swing high and up and down quite frequently. So recently, Bitcoin fell from 60,000 all the way down to 30,000. So investors who bought Bitcoin at 60,000 will be down about 50%. And this might unsettle a lot of investors, especially those new ones who will be forced to think that investing is actually risky. By diversifying your portfolio, you're actually lowering this instability and will help you sleep easier at night. So you don't have to stare at the charts every night wondering that if I'm going to go bankrupt the next day. The final reason why we should diversify is because it helps to protect capital. As I said before, you spread the risk, and you lower the risk, you are better suited in protecting yourself against large losses. Yeah. So you can think of diversification as this fruit basket, and this basket here. This basket represents your portfolio or your investments, and you can see that there are different types of fruits. These different fruits represent your asset classes. Maybe the bananas can represent your equities. The green apples can represent your your real estate. Maybe the red apple can represent sukuks, etc., etc. And the idea here is that if one fruit rots, it doesn't carry over to the other fruits. So meaning to say that if one investment goes bad, or it's your entire portfolio is still safe from total wreckage. Yeah. All right. The second way in order to reduce risk is through dollar cost averaging. So some people will tell me, then should I put all my money one time or should I dollar cost average? For newer investors, I always recommend to dollar cost average, which basically means I'm going to spread out my investment purchases at regular times. So I will set aside maybe $500 a month for each month to invest. The reason why we do this is because whenever the market is down or up, you are still able to deploy your extra investment capital. This will be good because when you see the market is down, you are not fearful to enter because you have extra cash that you have set aside for investing for that period of time. It also creates a disciplined saving habit. What does this mean? It means that if I know that I have to invest $500 the next month, then I will set aside a portion of my salary for investing. So this creates a disciplined saving habit. The third reason is to prevent trying to time the market. So what do I mean by trying to time the market? Most investors will want to try and buy at the lows of the stock market or crypto market or any form of market. The problem with this is that we are waiting and waiting and waiting, and sometimes the wait can take years to come. For example, if we take the period from 2015 to 2020, the biggest drop only came in 2020 because of COVID. If you spend your entire 5 years trying to wait for one moment, you will have lost a lot of upside from the previous 4 years. That's why dollar cost averaging is better because it helps to keep you invested inside the market rather than trying to find the bottom, which you might not even find the bottom when it comes. The last reason is to help manage emotions. So in investing, the biggest two enemies are greed and fear. By setting aside some cash every month and creating the discipline habit, it helps to control your emotions of greed and fear and helps you stay focused in your investments. That is the most important thing in investing, staying focused to your plan. All right, so how many assets are enough? We talked a lot about asset classes and the different types, but how much is enough diversification? In my opinion, at least, there is no perfect number. Some people can go up to 50, some people go up to 100. For me, I feel like less is also good. It's more of a trial and error according to your preference. Some investors really really can accept high volatility or instability. But some investors prefer more assets to make it more diversified and more stable. But my tip here is that more is not always better and less is not always better. Okay, more is not better because too many funds or too many assets can slow down your returns. You know, if you're trying to chase a 10% return, which is very average, it might not be possible if you diversify across like 500 different funds, because each fund performs differently, and even if you have like a 100% gain on one, the percentage is the size of it in respect to your entire investment portfolio is just too small for it to be significant. So more is not always better, but less is also more risky. So we are learning to try and get a nice balance such that we are able to sleep easy at night. So this is more of a trial and error. All right, but then the next question comes, especially for new investors. I don't know how to pick stocks. I don't know how to pick assets. I don't know how to pick cryptocurrency. So how do I invest? Okay, I got a simple solution for you. The idea is that if I don't know how to pick stocks, or I should just buy the entire stock market. If, for example, your mom sends you to grocery shopping and she asks you to pick this certain vegetable or this certain fish, but you don't know how to recognize the fish, what you can do is you just buy the entire fish market. So this will cover you because you are guaranteed to get exposure to a certain stock or a certain industry, or even just invested, in this case, investments in general. So there are two types of products available here that I'm putting up for your knowledge today. We have the index funds and we have the ETF. So I'll go through them one by one. Index funds is basically a basket of stocks that follow a certain stock market. So you can think of it as, if I want to invest in the United States economy, I want to invest in the United States company, I will look for a fund that will follow the United States stock market. So I will look for example, S&P 500, which is the US top 500 companies. I will look for a fund that tracks this stock market and I will buy that fund. Another example will be if I want to follow the Singapore economy, I want to follow the Singapore stocks. I will look for a fund or index fund that tracks the top 30 stocks inside Singapore, which is in this case the STI ETF, the Straits Times Index ETF. There are many ETFs. There are many index funds around the world for different countries. So if you need to find one, you are definitely more than able to find one. There's one for Vietnam. There's one for India, China, Japan, etc., etc. So you just need to find what countries you want to get invested in, and you buy that particular index fund. The second one is the basket known as ETFs. So they are a bit more. They are slightly different from index funds in that they are a basket of stocks, just that they follow one industry or they even follow one investment concept. So what do I mean by investment concept? Let's say you're a Muslim investor and you want to invest in Sharia compliant stocks, but you don't have to pick or you don't have to find Sharia compliant stocks. So you want to find a ETF or fund that invests in Sharia compliant stocks. And there are a few available for Muslim investors. So I've dropped a few ones that are available for us as Muslims to invest in if you don't want to go through the hassle of picking individual stocks. So we have SPUS, which tracks the US stocks that are Sharia compliant. We have SPRE, which tracks real estate. We have HLAL, which is also another one that tracks stocks which are Sharia compliant. So this will take care of the halal investing or halal component of your investments, and you do not need to worry. You just need to keep your money invested in the stock market, and as long as these investments perform, you should expect that your investments inside the fund will also do better. All right, so then goes the next question. Where do I go to buy stocks, or where do I go to buy ETFs or funds, or where do I go to get invested? So mainly there are three types of three ways you can invest. One, you can go through your financial advisor. Usually they will recommend you either a unit trust, or sometimes if you're invested in a investment link policy, they will recommend you some funds for you to invest in. The second one is a robo-advisor, where you will basically deposit money with them, and according to your risk profile, they will allocate your funds accordingly to your risk preferences. Okay. The third one is doing it yourself, which entails, setting up a brokerage account. So let me explain what are brokers. So usually you have probably seen either one of these brokers on a bus station ad. Maybe, for example, you have seen those Tiger Brokers ads on your bus stops or those taxis. Sometimes you see the Mumu ads, Interactive Brokers. These are the more newer ones that basically advertising currently. So what these brokers do is that they are basically a platform, or they are the application for which you buy your stocks, your funds, your crypto. And how it works is that these brokers are like the middleman. Let's say I want to buy a stock. That means I need to find a seller of the stock. The broker will then go to the stock market or the stock exchange, and they will find you another person who is a seller of the stock. And if you are willing to pay the price, then the transaction will occur, or the purchase will occur. So this is a commission paid service. So usually when you sign up on a broker, you will have to pay some form of commissions every time you buy or every time you sell. Okay, so that's the base idea of what's a broker. For those who want to know more about brokers on how to sign up, and you want to do it yourself, there is a guide on a sign up process in our slides, and I've also inserted the referral link to Tiger Brokers. I use it myself. If you want to use it, you'll get, I think, either a stock voucher or some form of reward from Tiger Brokers themselves when you sign up and use the referral code. All right. So as I mentioned just now, the broker will go to the exchange to find a seller. What the exchange is the place where the middleman goes to buy and sell a stock. So as I said just now, when you place your order with the broker will then go to the exchange. They will try to find someone on the other end of the transaction. So if you're a buyer, then they will need to find a seller. If you're a seller, then you need to find a buyer. So the brokers will find them on the exchange, and if they are able to meet a certain price, then the purchase will occur. So you can think of the exchange as the market, the broker as a representative for you. So what to look out for in the event that you want to start DIY investing and you're looking for a broker? Number one is regulation. So what this entails is that there are some brokers that are Monetary Authority of Singapore regulated or MAS regulated. And this is important because in the case where the broker goes bankrupt and you need to retrieve your investments back, it is much easier to do it through a mass regulated broker. Non-regulated brokers or non-mass regulated brokers are more risky, especially if the brokers goes bankrupt. There are brokers that are not regulated by mass, but they are regulated by other countries' monetary authorities. But I prefer to stick with mass regulated brokers for newer investors because the risk is lower and it helps to mitigate any problems in the event of bankruptcy. Secondly, is fees. Okay, some brokers charge really exorbitant fees for you to trade, and these fees will eat up into your profits. Okay, cheaper fees lets you pay lesser for the same service of trying to find a seller or a buyer. And the idea here is that you want to look for lower commission or maybe even no commission brokers, because the more fees you pay, the lesser you earn back from your investments. You pay more fees if you buy or sell more often. So when you think of people who are talking about trading or things like that, they will be paying a lot more fees as compared to you if you're just an investor and you're using a dollar cost average strategy, especially if you're doing it once every month or once every 3 months. So fees is very important because it will eat up. If you have only $200 to invest in every month and you are buying 5 different assets, usually the brokerage fee will be about $2 to $3 per buy. So 3 times 5 is 15, and if you have only $200, $15 is already gone from the purchase. So that's a cost that you will need to be aware of and you will need to control. Okay. The final one that I would definitely recommend for investors to look out for is easy to use brokers. There is no point trying to find a cheap broker, but it's very difficult to use. Some brokers are just made difficult to use for newcomers for whatever reason. And the harder it is to use, the easier it is for newer investors to get something wrong or to get confused. So some investors have asked me, okay, Dan, what's wrong with this? I cannot buy my stock. Then I explained to them, oh, okay, because you have not yet converted your currency from Singapore dollars to US dollars. Or then what's with this? How come got in margin? Why does it say buy on margin? It's because that it's a feature that you have probably signed up with your account that you put margin account instead of cash account. So all this I will explain maybe perhaps in the Q&A session, but basically you want something that's easy for you to use so that it's more user friendly for you. This again, it depends on trial and error because different investors have different ability to use the same broker lah. So it's a trial and error based on your preferences. All right, so now we have talked a bit about everything. With the knowledge today, at least you will have the idea of what goes around in investing. And if you want to start investing on your own, you will at least have the knowledge of how the investments work, what assets are available for you to buy, and how to at least sign up on a broker for stocks or even crypto or whatever brokers that you are using. The last thing that you must have before investing is this. Okay, I call this the 3-step die checklist because if you don't complete this die checklist, it's very simple. Anything happens, you will suffer, okay, or you will die in that sense. Okay, the first step is D, which is debt. Any high interest debts, such as credit cards, I will always look to pay those down as soon as possible because the returns on stocks are estimated at about 10 to 15% on average. But your credit card is a certain 27 or 26% per annum interest rate. So it is a very high interest cost. So always pay down your high interest debts, not your lower interest debts. So you can talk about lower interest debts as things like your CPF education loan, which is like 2.6%, 2.5%, your housing loans, which are also very low interest, so on and so forth. The reason here is because you will have more, you will definitely have a greater flexibility and ability to pay off these debts with lower repayments. For Muslim investors, obviously, if you want to avoid the riba element, try to pay off all your debts as soon as possible. But obviously, some debts are just very big, such as your housing mortgage or even your education loan. So you won't be able to pay these off in one shot, but you can definitely accelerate the process. The second thing you want is insurance. So a lot of financial advisors always talk about insurance. For myself, I also believe insurance is very important, especially for adults who are either working or have families to take care of. The reason is because if anything unforeseen happens, your investments and you're caught out in a bad investment period. When you want to sell off, you'll be selling off at a big loss to try and get back your money. Whereas for insurance, it's a guaranteed sum assured or guaranteed amount that you will get based on your insurance contract. So some of the more important ones that I feel most individuals should have at the minimum is hospitalization insurance. You will need to protect in case you get in the accident. There are also personal accident insurance, critical illness, term, disability. All of these you can seek your help from a certified financial advisor for more information. So just get yourself covered in at least for the emergency side. And lastly, emergency funds. This is the most important step in my opinion, even before insurance, because if in the event that you lose your income source, then you need to find money elsewhere. And emergency funds help you to cushion this fall. For students, I would usually look at 3 to 6 months because most of the time students have some form of income to fall back on. Maybe their parents will give them some pocket money. So usually a shorter time period is sufficient, at least in my opinion. For the adults, if you're a working adult, at least 6 months to 12 months in the event that you get retrenched and you need some time to transition into your next job. For those with families or you have children to take care of, I would definitely prefer that at least more than 1 year of emergency funds to be safe, because you will definitely incur some unforeseen expenses, especially when you have kids or you have elderly parents to take care of. So these 3 steps is a must clear, at least in my opinion, before you start investing. All right. And the second thing that you want to do before you start investing is to set investment goals. For example, if you don't have a idea of where you want to get to, there's no point in trying to invest, because you will not know what's the appropriate way for you to invest in. If you are trying to retire, you want stability. You wouldn't want to be throwing your money into higher risk stocks or even cryptocurrency. If you are looking for investment portfolio growth, you want something in a more capital appreciating environment, or what is known as usually growth stocks or higher risk stocks. All of these will play into account when you have investment goals. So speak to your financial advisors or speak to your friends if you want to speak to people who you are comfortable with, and see what do they think of your investment of your financial goals. And if you have a set financial goal, then obviously go to financial advisor. They will probably be able to give a good informed advice for you. Why are goals important is because, as I mentioned just now, it helps to keep you focused and stick to your plan. If you don't have a plan, you plan to fail, and if you fail to plan, you plan to fail. Yeah, basically you fail. When the market goes up and down, your emotions will be more in check when you have an investment goal, because you know that, okay, this plan is still intact. I am still on track to meet my financial goals. So investment goals are always important. The second reason why investment goal is important is because it helps you decide what kind of asset class you should be in. If you want stability, you want something like dividend stocks, or you want something more stable like sukuks, or for non-Muslim investors, you want bonds. Whereas if you're looking to grow your capital, you don't want to be putting your money into dividend stocks, you don't want to be putting your money into bonds or sukuks. You want to be putting your money into higher risk assets such as growth stocks, or some people might even be okay with taking on risk inside cryptocurrency. So having investment goals is important to give you the right assets to invest in. But of course, as for any investors, you should never invest in anything you don't understand. And I will be covering this in the next portion. So in the final words from me for beginners, always ask yourself these 4 questions when you want to start investing. What am I investing in, and what is the purpose of this investment in my portfolio? For example, if you're buying, say, an Apple stock or a growth fund, okay, you need to understand what is this, what is Apple? What does Apple do? How does Apple help me meet my investment goals? Why am I investing in this fund? What's the purpose of this fund? If I'm investing in gold, what's the purpose of investing in gold? If I'm investing in cryptocurrency, why am I investing in cryptocurrency? And knowing this, it helps you clear your bias, because when most investors jump into the investment world, they will always go on YouTube, they'll go on stock, they'll go find their friends to get stock tips, etc., etc. And I feel like there's a lot of bias and noise that it can generate, especially in this world of social media. So always ask yourself before you click that buy button, what are you investing in, and what is the purpose of this investment for me? The second reason is, why am I investing in it? What does this investment do? For example, if I invest in a company, I am investing in the company's growth or in the company's profitability. If I am investing in gold, the purpose of it is to hedge risk against inflation, something like that. Why am I investing in a dividend stock? Because I'm looking to get dividends paid to me every time. Okay, the third question to ask yourself is, what can cause my investment to go wrong? A lot of people like to talk about what is good about their investments, but I always like to ask myself, what can cause it to go wrong? And a lot of people don't, or always avoid this question before they click that buy button. They don't see what's the risk inside the investment. They always see what could be promised to them, but what is the risk is always often ignored or not highlighted. Example, if I invest in a US stock, I am exposed to risks inside the US economy. I am exposed to the risk of the company doing something that might not be in line with what I imagine. Example, the company can be involved in fraud, etc., etc. All this can be done. All this can be sifted out. All this risk can be sifted out through proper research. So do speak to people who are more in tune with certain stocks, and ask them for their second opinion. Don't just ask yourself, don't just ask social media, ask for someone that is well versed in this sector. Last one is, how does it meet my investment goal? When you know how it meets your investment goal, this ties back to the point about staying invested. When the market goes up and down, you'll be more ready to handle the instability or the roller coaster ride. Any investment always carries risk, and there's no stopping the stock market or the crypto market or any form of investment does not care about what you think. What's more important is you keeping in line with your risk and staying invested for the long term, because investments take time to manifest. You don't just get rich overnight, at least in most cases. Okay, and if you see many people making a lot of money overnight, chances are they're taking on a lot of risk that they may or may not know. Okay, so always ask yourself this: if you get rich quick, there must be a certain reason. It's most likely due to higher risk. Okay, so with that, I have basically come to the end of my presentation. If you have any questions later, do drop it in the Slido. I will try to answer as many questions as possible. If you want to ask me other personal more investment related questions outside of this session, you can always drop me a DM at our Instagram page at the Lepak Finance. You can also connect with me on LinkedIn. I can also answer that, or even you can join our Telegram group chat, Asyik Duit Je. I think there's about 800 or so people already inside, and we talk everything under the sun, from not just investment questions. We talk about CPF, BTO, anything to do with money, and just people like you and I. So a lot of people who have joined have feedback to me that it's actually quite beneficial. And we also have a resource kit inside there. If you want to read more articles, do just take the time to read our resource kit. We have prepared, I think, about we have prepared a list of links for investments, insurance. I think I'm not sure about insurance, but we have prepared for investments, CPF, and I think housing. So you can definitely read up on it. You can improve your financial literacy with us, and I really hope to see more people getting invested, because investment is no longer a thing for the rich, and it's no longer a want. It's something that is a need. It's just when you can get started. Happy investing, and I'll pass my time back to Adil. Thank you very much.
Thank you so much, Daniel, for that wonderful sharing. I think a lot of us have learned about the basics of investing, the platforms, the products, and more importantly, how each of us can get started with the strategies, right? So below in the chat, we actually have some resources that, if you're still curious and want to know more about what Daniel has just discussed about, you can just go to those links, and then you can also connect with him on the various links that he gave just now. So for the next segment, I would like to invite Murtadha to share about his principles, the intentions, and all things related to Sharia compliance with investments to give us a boost in confidence to start our journey right away. Murtadha, please.
Assalamualaikum, everyone. Can you hear me?
Yeah, we can.
Okay, can. First of all, thank you very much, SMU and Brother Adil, for very insightful sharing. So over here, what's going to happen is I'm looking at there are plenty of my associates from the non-Muslim side, non-Muslim community that is joining in. So I will try my best not to make it too technical. I will try to make it as lighthearted as possible. So this is you can join in with an open mind. So there's no such thing as a wrong question, or you are afraid that this might be an insensitive question. You can just throw in, and I will assess. I will see to it later on. So without further ado, we just jump into the topic. So ultimately, the topic of investment, it is none other than focusing on wealth accumulation. Ultimately, what we want to focus now is to ensure that a very beautiful harmony of the financial and religious decision, in the sense that, for example, if you want to make a decision, you just, of course, when money is very limited and the opportunity cost is high, for example, you can just get a $7 mix shield, but it might gonna be an offset to what you're gonna be able to purchase later on. But ultimately, when we talk about financial planning or per se investments, it is what we call money that is being spent at the most correct and the most rightful place, and that is in a sense the nature of money. Money is meant to be spent on, whether now or whether later on. But ultimately, when we make this financial decision, we as Muslims, we have certain restriction or certain guidelines that we have to follow through, and that is the reason why we are focusing on today is because when we want to make when we want to integrate our financial decisions together with what our religious principle is, we need to bear in mind that our money is not for it might not be for our own consumption. Our money we use to give pocket money to our parents, we used to give but we used to buy gift for our loved one, etc. And last but not least, when with money also, there are certain acts of worship like zakat, or an obligatory donation. And when our source of fund comes from a place of areas that might incur the wrath of the Almighty, it might be the worst case in hand. So that is why when we talk about investment, number one, we just want to make sure that whatever decision that we make, we are making the most rightful financial decision. Because when you make the wrong decision, your money gone already, your money burned already, then cannot make it ready. And second thing, at the same time, we cannot just bull through, we cannot just whack anyhow, simply because of maybe some people say that I'm quite lenient with regards to this religious boundaries per se. But we need to bear in mind, remember, our money. So if it's for your own consumption, then so be it. But remember, would you like it? Then I would like to throw in a question to you. Would you like it if you knowing that, oh, your best friend just belanja you Seoul Garden, then, hey bro, this one I cannot afford it that day. Of course, the feeling might not be so nice. Get what I mean? So again, I would like to recap the purpose of this session is because our brother Daniel has already enlightened us with regards to when we talk about investment, we need to have the know-hows in this case. But my input today is just want to make sure that people would not have the reservation, or people will not be too afraid due to religious concerns in this case. So again, in my years of being in the financial line, I have close friend that say to me, "Oh, wasted sir, you cannot pump into this very good dividend bond, this kind of thing." And of course, then my close friend also, he's an avid trader. He trade into many things, and he said that when I sat down with him, bro, too bad you cannot put into all this one make money one, no. But here's the thing, we need to be at ease with ourselves, simply because we know that alamak, we shouldn't have that feeling of alamak, never mind, and our religion cannot do this and that. But then we need to literally have a strong foundation, in a sense that we need to feel at ease, in the sense that whatever that restrictions, whatever that guidelines that is being put for us, it is for our own good, and we believe in what we call the wisdom, or what normally known as hikmah. So where is it exactly that our religion comes to place with regards to all this that isn't exist that is inexistent for many years back? So this is our religion. In our belief system, our religion encompasses every way of life, every step of life that literally leaves no stones unturned. So for our religion, this is where all the rulings comes to place, or what we call the Islamic jurisprudence. So our rulings that is in place is divided into two major branch. The first branch is none other than with regards to the act of worship or religious matters. So the rule of thumb is say that any act of worship is prohibited, or no prohibited, or like haram. So every act of worship is prohibited except there's a commandment that asks you to do it. For example, just now we pray Maghrib. There's an obligatory prayer of the day. It requires to perform 3 rakaat, as in 3 full cycles. Then you say to yourself, for example, alamak, I got extra energy. Can I pray Maghrib 4 rakaat in this case? So here's the thing, that one is already wrong already. Yeah. So ultimately, with regards to the ruling that is between man to God relationship, everything is prohibited, or more known as haram. Everything is prohibited except there's an act of worship that asks you to specifically and explicitly do that kind of thing. However, it's a inverse relationship. Inverse relationship with regards to any man to man relationship, man to man relationship. Here's the thing: our religion, when it comes down, or when it's being shared to mankind, it is said that it is a way of life. It is something that is to guide and make our life easier. So our religion is actually very lenient, very easy, but it is wrong when we manipulate it to make it easy for us. So with regards to getting back over here, our religion, the rulings are over here, and when it comes to the ruling with regards to man and man relationship, it is said that everything is all right, everything is okay. Just do what you want, literally do what you want, except with regards to, now we are in the topic of investment, is over here. Any monetary methods is over here. Do whatever that makes do your thing, literally, except whatever I'm gonna put some boundaries, whatever I'm gonna put some restriction, whatever I'm gonna put some red tapes, please do not cross. So rather than you have to remember all the things that is everything, this thing cannot, that thing cannot, and etc. Why not you just do the elimination method? I know that 1 to 3 things you can't, so then then you can maneuver through your finances or through your whatever transaction you want to get into easier that way. So I recap with regards to man and man relationship, with regards to man and man relationship that concerns these financial matters, rather than you expose yourself to knowing everything, which is almost impossible, why not you just know the things that you're not supposed to do? Then you can maneuver easier. So I'm going to start with understanding what, when a religion or rules is being imposed, rules being introduced to mankind, is none other than to like I mentioned, you want to take care of the sanctity or take care of the well-being of the humankind, or to protect the interests of mankind in this per se. And if you ever heard the Maslow hierarchy of needs, it is kind of revolving around the same concept. So of course, again, I don't want to get into too technical over here, but our focus is, when you talk about finance, for every restriction or for every guidance that is being introduced with regards to finance, with regards to wealth, it's going and always gonna focus over here: preservation and protection. Wealth, we in economics over here, if you are familiar with the concept scarcity, our belief system says the total opposite. Our wealth is being made in abundance. Everything is there, literally everything is there, but then there are ways for you to for you to achieve it, or for you to attain and manage it now. So again, anyone can parrot things over the net now. So the reason, so in our religion, there are Quranic narration, there are prophetic words, but then our scholars, our contemporary scholars, they have come together and make it what we call like exegesis in this legal maxim. Sorry, this is like legal maxim, basically a small snippet in a sense that small snippets of whatsoever the main idea. Like I mentioned just now, everything is being made permissible except when there are religious restriction that indicate that we shall not transgress anything that is being made not supposed to lah. So again, I believe that when we talk about, some people say that when we talk about this kind of matter, everything is a rabbit hole. The more you know, the more you feel that you need to get to know into. Remember, like I mentioned, our religion is quite simple. Again, don't take it from me. What I'm sharing to you today is whatever that I have learned, and I'm not trying to school anyone, or I'm not literally azankan siapa, and this is as good as a reminder for myself also. So my game plan is I just want you to know what I've done already, so that we are in this together, literally, to eventually have a community or eventually have a social nucleus of no one is literally lagging behind due to financial or due to religious restriction when it comes to monetary matters. Again, don't be intimidated from what you see. I'm gonna focus your attention to here. When you get, what are we talking about when we are talking about investment? Investment literally is a transaction, is an agreement, and what our Malay lingo, we call it an akad, or this simple akad, this simple handshake. In our belief system, this simple handshake carries a very, very exalted or very high meaning behind it, in a sense that this simple handshake is the one that differentiates between these two individuals. Are they strangers, or are they actually husband and wife? So when you want to get into a particular transaction, in this case maybe an investment, there are always more than what, there's always minimally two parties, party A, party B. And doesn't matter when we are not going to focus on who's the party A, who's party B. I want to bring your attention to what is it that is, when we get into a particular agreement, what is it that we are agreeing upon? Agreeing upon, in this case, some people call it makun alahi, but this is the actual terminology, is subject matter. Remember, again, I recap so that it won't be too much of a drag. We Muslim, our religion say everything is being made permissible except when there are boundaries. Then, rather than when we get into the boundaries matter, we look straight into what is it that the main objective of our religion. Our main objective of religion, they say that they want to guide us. So when they want to guide us with respect to this matter, then we narrow down into the topic of what we are talking about. We are narrowing down into the topic of investment. When we talk about investment, there's always two party. When there's always two party, we are always dealing on one particular thing, and that is what we call the subject matter. Remember, this is not a particular stock. This is not a particular item, or this is not a particular service. We are talking about when you do a particular agreement, all things that must be agreed upon must revolve around this nature. Number one, of course, it must be something that is being acknowledged as value. So for example, if you want to transact into something that our religion doesn't feel that it is of value, literally, for example, fecal matter. Fecal matter, literally, when someone want to buy and sell fecal matter, long time ago, it is not permissible. But then when fecal matter or manure become a fertilizer, then our religion say that it is okay. So that is number one. These are very crude example, but I hope it can give you a bit of idea. Number two, it must be according to what is being said is permissible. So for example, when there are explicitly when there are explicit or specific verse that say that do not transact into like intoxicant, do not transact into what is that's gonna cause or bring immoral, or what is immorality, or what is it that's gonna bring back negative externalities. All this must be quite straightforward. For example, you shouldn't invest into things that like, for example, military things that gonna bring harm to whether physically or emotionally to the external party. And third part is when you want to transact into something, you must ensure that it is of your full possession. Later, for those traders, this might actually ring a bell. You remember short selling? Short selling is literally you sell something you don't own. So this is where it comes to the picture. And last but not least, of course, must be deliverable in the conclusion, I would say. So later, remember, these are the overview. Later, we will look each individually into each and every one of them. It cannot run away from all these one. So I'm going to begin from ascending order from the degree of lower severity to the higher severity. By the way, there's only three. This is number 3. So this is similar to the one that I mentioned earlier, when our religion said that when you deal with a particular, when you get into a particular transaction, you must ensure that it must be consistent with what our Shariah principle is, what our religion actually say can is can, cannot and cannot. This is the one that I mentioned just now previously about fecal matter or manure in this case. So this one is also quite straightforward. You shouldn't get into things that our religion doesn't acknowledge, etc. And for those who are studying on their own, you might actually seen this term. That is what we call a qualitative analysis. You are actually literally seeing into the quality of the item, or the nature of the particular item. So I bring your attention to this particular cartoon. So you see this toy truck. Do you think there is any particular reason why this thing might be prohibited? So over here, you see something that is very innocent, something that is very like no issue with it. But some people, because when we study our religion, some might argue that, oh, Ustazah, so now I'm gonna play Toto. Then I'm gonna win this big money. Then I'm gonna give my family a good life. They don't need to know one. They don't need to know one. Sounds because money itself, I don't see any literally. Allow me to use the example. When I look at a piece of note, I don't see any pig on it literally, for example. So I think this money is okay. Just the act of gambling just now is not okay. But my family, my loved one is free from the punishment or sin in this case. So this is what I call something that is being prohibited, something that falls into the haram category on a secondary level. So this is the primary level that literally got a ruling that said that you cannot get into it. But there are certain instances where there are in fact many instances that when you deal with a particular, due to a particular act, or due to a particular reasoning or manipulation behind a present state of things, it will fall into the haram category. Quick example, you want to trade Apple stocks, or you want to do a particular business, but then the way that you engage into that particular business will literally render this particular profits or revenue impermissible. Or literally, what I mean is our religion will have an issue with regards to our revenue that we're going to get over here, simply because of the acts previously. The second one is I want to talk about gharar. Gharar literally means ambiguity or uncertain. So no need to read all this. You can read this on your own, but I like to give a quick example. So for example, we go back to the pre-Islamic periods where people are transacting with raw materials like rice, wheat, barley, all these small bijirin grains item. So for example, a person A wanna buy 20 kilos, $20 of rice of 20 kilos. The person is over here, another person is over here. I don't know if you can see or not, is this better? So he over here, he weigh 20 kilos of rice. So the distance is, there is a actual literal distance for him to carry this rice to give to this particular person. So this 20 kilo of rice is in a bag, in the sack. So when he carries, some of it will drop, literally. Yeah. So this particular lady is paying $20 for $20 kilos of rice. So if she were to scale over here, will she get exactly 20 kilos or not? So this is what we call gharar or ambiguity. But then due to its minor ambiguity over here, it is tolerable. It is not as if that this guy over here is trying to cheat, try to be a smart aleck, try to make more profit. So over here, what our religion mentions, when we want to get into a particular transaction where there are certain uncertainty, there are certain things that you already have done your best, but you can't differentiate what is it that you can control, what is it you can't control. Our religion understands and make it into a particular nature, in this case minor ambiguity, so that they won't penalize, or literally it means forgiven. So over here, these are the main and bulk reason why why all these things becomes questionable, simply because where the uncertainty is quite large or the ambiguity is very major. So that's why it is hard for, in a lack of better word, for our religion to close an eye on it. So last one we're gonna focus into the rebut thing. So again, excuse me for giving this kind of example, but I want to make it in a way that this is very relatable kind. So we are in the topic of rebut, the last one. So I'm going to give a quick example. So in the period of COVID, a lot of people, many are trying to do like home-based business, for example. So for example, I have an idea. I want to make I want to get into a particular, I want to do a startup. I want to sell, for example, tertiary. I want to sell tertiary, but then I say to my friend, bro, I don't have the dough, I don't have the capital to actually start this business. So can you lend me 5,000? Can you lend me 5K for me to actually kick off my business? Then if I'm making profit, then we just share in proportion to what we agree upon. But then he say that, okay lah, then my friend say, okay lah, if it's good, if it's all well, then the profit, then we should split accordingly lah. But of course, being a woke gentleman, he will of course wanna ask, if things went south, if things go south, if your business don't make it one, so what's gonna happen? Then I told him that just now you believe in me, you feel that you are giving me a chance. You are giving me a chance for me to start up my business. So you gave me 5,000. If everything goes past, if I don't make it, I will still give you back your $5,000. This thing looks like an investment, but in actual reality, when there's no profit sharing, it is not an investment, because simply as a Muslim, there's only two main source for us to earn money. Number one is you work or you side hustle. You work your 9 to 5, then at night you do your Grab, etc. And this is our main source. Second thing is when you put the hustle or you put that work into someone else, and that is where investment comes to the picture. You are putting your faith, your trust into someone else effort, someone else hustle, so that you can share the profits. Okay, So again, I'm gonna pace out a little bit because I feel that we are gonna be run short of time. So the last part, and that is none other than riba. Okay, riba, we can talk 3 hours non-stop about this kind of thing. But then I want to focus on the one that revolves around our context nowadays. Because actually this thing, riba that involves debt, it is already exists in pre-Arabia times. For example, a person owes an individual $1,000. When the time comes for him to pay back $10,000, literally the person will come, "Atakdi au turbi." Do you want to pay me back or do you want to take riba? Literally, the conversation goes like this. So riba means excess. Riba means something, a surplus that comes out of a debt contract in this case. But interest is riba, but that riba itself is not interest. So this one is existent in this day and age, but not so much. So we're not gonna look into it. But it is over here. Remember just now, I want to do up my business. However, I don't have that capital. But then I guarantee my friend, worst case scenario, he's gonna get back my money. So I gonna scale down that example. Now now your friend wanna buy drink. He don't have money, then you lend him $10. Your friend wanna buy drink, you lend him $10. So how much are you guaranteed to get back? Is it $11? Of course not. Is it $9.90? Of course not. So I'm not gonna, in a particular transaction, before you actually earn interest, the contract itself, the contract has fallen into a debt contract, has fallen into a riba contract. You get what I mean? So the moment when you engage into a particular contract where the capital is guaranteed, it's not an investment contract. It's not an investment contract, it's a debt contract. And any profits that you earn out of this kind of thing, it is acknowledged as an interest with this is how I can make it concentrated now. Because the ruling says that every act of debt that renders you profit, it is riba. Yeah. So that's why some people, they are very pious in the sense that they feel that every benefit that he gets from lending someone something, he is scared of doing it in a sense that I give you, for example, this person, they lend the person money, then he said that, you see, you lend me some money, I send you home, I drive you back. So some pious people, they even feel that this might be riba one way or another, so that's why they tend to avoid it. So again, the reason why people are very scared or very concerned with regards to this riba, for every act of sin, there is a punishment that comes together with it now. So, but then there's none. There are with regards to punishment, there are small punishment, there are big punishments. So big punishments is like murder, rape, and riba falls into the same category with regards to the big punishment, also known as the al-kabair. That means the large ones. Yeah. So this one, like I mentioned, so whatever you give your money out, the exact amount you must get back one. Yeah. So again, nowadays when people want to get into an investment contract, or they want to start their investment, regardless whether they want to do it themselves, they want to do it with their insurance, they want to do it with their robo, each and everyone, they will have a questionnaire. Today, assumingly we live in a state that everything is very well regulated, everything is very well organized, they would say that, since you don't know how to invest, why not you just put according to your risk profile. So the lower risk and a higher risk. Again, I'm making it as simple as possible. So now when you want to do an investment carry risk. So some have little risk, some have more risk. So today when we talk about investment with regards to debt oriented, or what we call it bonds. So over here, when you invest in that mechanism, you have very low risk in the sense that what is the risk of you lending money to someone? There's just one risk only. The person cannot pay back. That's all. Just like over here only. This I'm oversimplifying it. Yeah. But then when you invest into business, when you're investing into companies, you are exposing yourself to risk. Alamak, market not good. Alamak, people cannot afford this kind of thing. But then with a lack of better word, when we talk about investment, with regards to that mechanism, this thing is already a sure win one. So that's why if you can find, I don't know if this is true or not, Albert Einstein quoted that compound interest is the eighth wonder of world. Because given time, this one you already win one, small win or big win one or bigger win. You just, because you disconnect yourself from that particular event that gonna unravel, so to speak, compared to if you invest into a particular business, you have to have that headache, whether the business make it or not. But why not you just put into lending people money, then you already earn a little bit, right? So sounds good. But this thing, in all honesty, if I can share, I feel that this thing is a no-brainer. But then again, we are the believer that there's a wisdom behind every single one of the things that is being imposed. So again, what is the wisdom? Number one, when we talk about this interest, when we talk about riba, when we talk about the exchange of money to money, this kind of thing, is the focus. The first part is why is riba impermissible? Is Islam doesn't, remember just now when you want to get into a transaction, the thing must be acknowledged as something that is of value or something of got intrinsic value, etc. Money itself is a medium of exchange. Money is not a particular asset. Imagine if I have $10 note, then I cannot take interest. Then I say that, oh, this is my $10, I lend it to you. So as long as you hold that my $10, you just pay me $1 every week, this kind of thing. So all this manipulation, the hindsight of it is they do not want money to become a play game among the rich. Our religion doesn't acknowledge. So again, the jurisdiction part of it is because although this thing is not an immediate, but why there's a little really just guideline in the sense that man and woman cannot be alone in a particular room, this kind of thing. It's not because this thing is wrong, it's just because they foresee something might be of secondary wrong thing that might gonna come lah. And second thing is because it is socially unjust in the sense that when people borrow, no one want to borrow actually. No one want to lower down their water face just to borrow some money just to get by, this kind of thing. But now it become a plaything literally. And last but not least is of course when a person already get in it, for example, I'm lending and I'm an issuer of bonds or I'm lending money to companies, this kind of thing. I'm already, like I mentioned, it's a show win for me versus that particular person. He's literally have to meet and speak just to pay me back. No need to think about whether he make it or not. He have to first think whether he can pay me back or not. Yeah. So at the end of the day, some people say that, oh, alamak, this riba is because this interest, it is because things are unjust. It is because there might be oppression, this kind of thing. Again, what our religion mentions that Muslim, you can do what you want. Just engage into whatever you want between you and the individual. But then in that particular agreement, try not to manipulate. Like, apa tu nama dia? Jangan, when you, allow me to use bahasa Melayu, you buat apa yang patut tapi jangan sampai mengharamkan yang halal dan menghalalkan yang haram. You don't twist around the rulings. That means you do what you want, do not twist down the ruling. Like for example, this one is meant to be, this one is meant to be like this. But then you say that just between me and you, I feel that I'm good. So I think I'm gonna I'm not feeling oppressed. I'm not feeling that you are taking advantage of me. I'm feeling literally you actually help me by lending me some money. So that's why I wanna put in that contract, I'm gonna make it a point, I'm gonna pay you extra. This one is no bueno already. But in the event that you want to pay back extra, at the end of the day, so be it, but it cannot be stipulated in a particular contract. Then the contract is not, it's gonna fall into that riba contract already. Again, you can screenshot all this one if you want to read on your own. Again, the last part is, okay, the last part is our scholars, our contemporary scholars had come to an agreement that we cannot run away from the dynamics of living condition where you cannot separate between the riba thing, the interest thing, or you cannot literally separate when, for example, you want to invest in a particular real estate, but then downstairs got a KTV, etc., for example. So the contemporary scholars or the religious heads of the Islamic finance, they have come together and formulated certain benchmark or certain guidelines for us to follow. It is similarly, like I mentioned, remember the rice grain example? He said that in a particular contract, if whatsoever there are many guidelines with regards to different part of the world. So I'm taking this Suruhanjaya Securities. That is our neighboring country, Malaysia, simply because I feel the main dominant school of thought is the Shafi'i school of thought, similar to us, and also they have the most similar cultural and demographic. So some people say that why not I take this benchmark from the one in UK. I feel that one might be not so good in the sense that not so similar. So this one you can read on your own. I just focus on this 5% benchmark. So this serves as a particular guideline in the sense that you can transact into whatsoever contract, but then you can identify so as the one that is prohibited doesn't exceed that tolerable amount, tolerated amount. So this is on a hindsight, why our POSB, our typical conventional bank, is still okay, is still close one eye one. Not to say that the interest that we get from our PSB banks, it is accepted, this kind of thing. It is still interest one. That literally, unless you use the Islamic bank account, you cannot just say that, oh, now I'm giving you interest, but then I just change. Okay, never mind. This one I take it as you give me hadiah, you give me gift. This one cannot one. Because niat tak menghalalkan cara. As in the way when you don't change your mindset, then that thing suddenly become permissible. So a quick example, for example, a person want to take an ablution. When a person want to get into a prayer, then must wash hand, wash face, this kind of thing. Then what if the person just jump into a sea, then say that, oh, I take wudu already. This one wrong already lah. Semua benda, everything got a particular ways to do it. So getting back to this benchmark, it is said that this particular percentages or this particular small amount, it doesn't render the entire contract void, and it is like forgiven for you to transact to it. So a quick example, you put your money into something that has 5% interest. I use a fund. Fund is a mix of investments. So for every $100 you make, $5 you ketepikan and you set aside, simply because this $5 is not acknowledged by our religion. But can you still get into that particular investment? You still can. It's not you are supporting that particular wrong thing lah. You have done your best to actually find a particular fund that is of minimal prohibited items. Again, this is why I mentioned that there are different financial screening based on the different group or cluster of religious heads. Again, you carry on your own. Okay, last but not least, for those avid traders, those who like to do trading a lot. So when a person don't want to go through the hassle, there are platforms like Zoya, there are platforms like Islamically that literally help you see that the percentages of the prohibited items, maybe from alcohol, maybe on, maybe from alcohol, this kind of thing. And also for those who are getting their hands into crypto, it has something similar also. And I would like to end up with, ultimately, it's almost impossible for you to do your own, or to literally check each and every one of them. But then we are the general public. because there's only so much that we can do. So what can we do? We can bersandarkan, we can rest our beliefs towards the higher authorities. Like for example, I give this example. You know that this one is Muiz one, but then you see this one, of course, logically, you cannot you must literally think that's what I'm trying to say. And last but not least, what we call the obedience concept or ubudiyah concept. So we Muslim, we are told, although our religion is quite linear, we can't cherry pick. We know that certain things might have a conflict of interest one. That's why sometimes I tell to my friend, he who indulge in all this, so to speak, I'm gonna give you 1 week, just whack everything you want, see you get rich or not. Yeah, see, also cannot say one. And last but not least, certain things, there's only so much that we can understand. We can't wrap our heads around it. We just have to get the rough idea, why is it so much, and ultimately this thing one is kind of like an ongoing learning process where a lot of new things emerge, a lot of this is ongoing discussion with the scholars. So ultimately, when we want to get into a particular act of transaction, in this case investments, we do a little bit. We do a little bit of homework, do a little bit. Of course, you cannot do every single one, do everything, but at least do a bit, so that when one day, when we cannot question, at least we know that we did a bit. Yeah. So that's about it. So any one of you guys have any question or whatsoever, can just ask me over in my Instagram. So, and give me some time for me to reply. Thank you very much for listening.
Okay, thank you so much, Murtadha, and Daniel also for those wonderful sharings on investment, and also the Sharia compliancy to give us the confidence in managing our investments in the future. Kevin, can you bring up the slides, please? All right, thank you. So, okay, we're going to move on to our Q&A session right now. So, looking at the Slido link, these questions can go to both Daniel and Murtadha, up to you guys who wants to answer first. We're going to start off with firstly, okay, with $1,000 as a beginner to investing, where would you invest in?
Okay, I'll go first since it's something quite relatable to me. I also started out with $1,000. For myself as a beginner, if I was a beginner, I would recommend, or I would really use diversified ETFs or index funds. As I said earlier, they give you automatic investment diversification. So this lowers your risk, and they are also lower cost. So the fees will not eat back into your returns. And they are very simple to understand for beginners as compared to understanding a business or a certain cryptocurrency. So for the simplicity, for the diversification, for the ease of use, I would definitely say index funds, ETFs are the way to go for those with really small capital. Although the growth will be a bit slower, but then again, we're not going for get rich quick scheme. So be patient and trust the process. Even with $1,000, you can definitely do investments. Yeah.
Okay. So for the next question, are robo-advisors halal to invest in? I understand that portfolios consist of ETFs and bonds. Maybe Murtadha, you can answer this.
Okay. Very good thing that you brought up robo-advisors, because I feel that is where I begin my investment journey. In 2000, I forgot already. Many years back lah, basically. So robo-advisors, it gets your hand into the ETF or index funds. However, for all this, you must remember there are equity, there are bonds, all this, they are of the risk questionnaire thing one. I don't remember that one. Either endow us, either Saif, Stashville, all these, they have their own kind of risk portfolio. So at the end of the day, what do you know that you can do is you want to make sure that everything goes full on equity one. And of course, since you cannot control to which equity it is put into, is it like you have done your best already? So you can look into the benchmarks. Look into the benchmark. Easiest way to put it, for every $100 you put over there, it might be even lesser. It might be 3% or 1%, but you just play it safe. You just, for every $100, you just ketepikan, you just set aside that 5% lah. Yeah, just to be safe, better be safe. Yeah.
Okay, I think that's a good point also. It's very hard to run away from bond allocation inside robo-advisors just because it's a risk management strategy in the finance world. Bonds are just more safe in the aspect because you are the lender. As we said just now about riba, you are the lender, so you are more guaranteed. Maybe if you're just talking about robo-advisor in general, most of them in Singapore, at least based on my research, are non-compliant. But there is one that is non-mass regulated, which if you're interested to, it's a bit more higher risk. You can look at Wahid Invest. So that's the only Sharia compliant robo-advisor that I know currently. Outside of that, there is no existing one that is fully compliant. As Murtadha say, you will definitely look at not just the bond or stocks, but you also need to look at, if you are looking at equities, what kind of equities are invested in. Because sometimes these equities are invested in like gambling products or gambling companies, tobacco companies, all of these which are not compliant. Yeah.
Okay, thank you so much for you both. Okay, so the next question is, do we need to have a prior stable income in order to start investing?
I go first, then maybe Murtadha, if you got anything to add, you can add. So for me, I'm a student. I have a part-time job. I do tuition. I would say income is important to keep invested and to keep having the money to dollar cost average, as I mentioned earlier. But to say stable in terms of every month I must earn like 2,000, 2,000, 2,000, I would say there is no need. As long as you do your budgeting, and if there is money within your budget to invest, stay invested. You don't have to, if let's say you are a freelancer and your income is really not stable, what you can do is on the months that you have more than average income, you should have invest more in those months. And those months that you have less than average income, you cut back and you focus more on at least meeting your daily expenses and those necessities. Because investment, although it's necessity, you obviously want to take care of your survival needs first. Yeah, that's my opinion.
Murtadha, do you have anything to say for that question?
I think if I echo what Daniel have to say, but I would like to add that you try to find the any investment platform that doesn't need so much of a capital. At least give you an exposure a little bit also, never mind. At least you get to ride the market a little bit. Then when the time comes where you have that door, you can whack one.
Okay, Ken, thank you so much to you both. All right, for the next question, okay, since the market fluctuates and there is no certainty, is investing then permissible? Maybe Murtadha, you can start off first.
Sorry?
The question, since the market fluctuates and there is no certainty, is investing still permissible?
Yeah, of course. So nothing is for sure. No one knows the future, literally. So, but then what you can do, you can prognosticate or you can actually foresee certain things. I give you a quick example. So, for example, a particular school, there's no canteen. There's no canteen over there. People always go out. Then your friends say that I want to open a food store inside. Of course, you can actually think or foresee that this thing might actually make it. But then suddenly, if COVID, then no school one. That actual opening shop is still permissible, and that actual me putting my money to my friend still okay one, because this is how the nature of it goes into.
Yeah, Daniel, do you have anything to say about it as well?
Okay, so there's no certainty in investments, and that's a clear fact. Nothing is guaranteed. But as Murtadha mentioned just now, under Gharar, the minor Gharar, that is something that is tolerable. So it's not that the fact that it's uncertain that makes that is just because there is uncertainty, it makes it impermissible. But excess uncertainty or very large amounts of uncertainty makes something impermissible. Of course, this one sounds very qualitative, but yeah, in the stock market sense, it is in this case permissible.
Okay. Right, thank you so much for you both. All right, I think that cleared some uncertainty as well into that question. So I think we'll go to our last question for tonight. I know that you guys have many questions that have been posted, so we will bring these questions and relate to Daniel and Murtadha in a separate session. So inshallah, they will answer it for you in another time. So the last question is, is more technical. Is that what are the things that you look out for when picking particular stocks? Is it, for example, like the company financial statuses or debt, etc.?
I go first.
Yeah, sure.
Okay, so when I look into a company, there's a lot of things that you have to examine just from a basic investor perspective, not even as a Muslim investor. So you want to see things like for stocks, you want to see things like the management, who's managing the company, what's his experience in his background like. You want to look at, of course, his financial statements because this tells you the financial health of a company. You don't want to be investing in a company that is on the verge of bankruptcy or largely unprofitable after so many years. You also want to see what is this company doing in terms of its operations. What is the main driver of its revenue? Where is it getting its money from? It's even more important as a Muslim investor to know where your money is coming from, right? And lastly, you want to know what is the appropriate price to pay. So you need to do valuation. So this is something a bit more outside and very technical. So I won't go too much into it, but it's just finding the right price to pay for a stock. Adil, also one more thing. Before you close out the session, is it okay if I answer one additional question that I got on the side as well? Because yeah, I promised to answer one question earlier. All right, Murtadha, if you have anything.
No, I agree to everything that you say, literally. Yeah, but then for me, as time goes by, later after school, you're gonna literally become very, very busy. So how I normally do it is because we begin our journey, everyone starts somewhere one. But then there will always, due to nature of work, their level of being occupied is different from one another. So that's when you have your group, the investment group, you can just tumpang into whomsoever that is doing the homework for you, then you can just tag along lah. Yeah. And of course, the someone must be someone you trust lah. Yeah.
All right, Daniel, do you want to answer that question?
Yeah, so the final question, I guess, for tonight, I promised all of my followers on Instagram, I don't know whether he's here tonight, but the question he proposed was, is Forex trading permissible? And I think I want to clear this up between not just for all the Forex traders out there, because there are very confusing rulings that are out there right now. So I want to explain how or the difference between retail Forex trading, which is the online version, and the physical Forex. Adil, is it okay if I share screen? I want to do a whiteboard.
Kevin, can you give it to him?
Yeah. All right. So, okay, Bismillahirrahmanirrahim. Do come with an open mind, but this is just purely based on my research, and I have done quite a lot lah. Let's just put it that way. So let's explain Forex trading as it is. So for people who do Forex trading, what they do is they sign up on a Forex broker and then they trade money on Forex. So what's the difference between the Forex trading inside the online version and the physical one that you go to the money changer? I will explain this in the guiding principles of the riba, gharar, and maisar. So number one, the difference between the online Forex and the physical foreign exchange that you use, or even the one that you use on the bank, is that number one, you're using margin. So I don't know whether you know this, but most Forex traders, when they go in, they are taking on margin, which is either you're borrowing money lah. Usually this come in the form of $1 to 50, 1 to 100, 1 to 200, 1 to 500. So this means that for every $1 of equity or $1 of cash that you deposit, you're taking on $50 of loan, 100, 200, $500 of loan. The problem with this is that you have to pay it back in the future, and this future will come at the additional cost of interest. Usually for Forex or even stocks lah. Stocks you can do margin, and derivatives like options also you can use margin, and all of this makes that at the first level impermissible because you're required to use margin to make big profits. In Forex, I'm pretty sure most of the Forex traders know the fluctuations are very small. You're looking at less than 0.1% of movement a day. So in order to magnify the returns, most of them use margin, and in this case, you pay riba. That's the first argument that I need to make clear lah. When you go to a foreign exchange, you don't take a loan for your money, right? You use your own cold hard cash, and you get back. If I have $100, I go to the foreign exchange, I'm getting back $100, but in another form of another currency. So based on the margin principle, riba itself, that makes online forex trading very difficult lah, because unless you use one-to-one margin, which means that you don't use any margin at all, that already fails the first principle, which is riba. The second thing is that there is the problem of those, if you get by it using a supposedly Islamic account. So some of these brokers will say that I have an Islamic account and you don't have to pay the interest fee. Usually you pay back in the form of a service fee, which is in hindsight is just a different way of positioning interest lah. So some of it is just purely out of the commissions, some of it is pure out of interest. So they combine it together and just label it as a servicing fee. So maybe in my opinion, I find it not satisfactory enough for me lah to say that it's riba yet, but some people will definitely say it's still considered riba. Even if you get past that, now you come to a third problem inside online forex trading, is that the asset class you use is different than the one you use inside physical currency, or even the one that you use at a bank account. In forex, right, if you actually look closely at what you're holding, right, you're actually holding a CFD, or in some sense you're holding options, or you're using a swap. This is very technical, so pardon me for those who are newer. But these CFDs are basically derivatives, and derivatives are a piece of contract or paper. And as mentioned just now by Murtadha, options, futures, CFDs, they all fall under the category of derivatives, and therefore you only get the asset. The paper itself is valueless. The paper itself is only taken from the value of the cold hard cash value. So this paper needs to derive its value from something else, which means that there is some form of gharar. So this does not satisfy the second condition. So we see that there's riba, there is gharar. And the last one that is involved inside forex trading, right, online versions, is MESA. And how it manifests is in the form of CFDs. How CFDs work, or options work, or derivatives work, if anyone has seen or heard of it on YouTube ads, what it basically is a paper contract. And you have a buyer and you have a seller. Okay. What's happening here is that you are locked into a contract and you're willing to pay the difference in the value. So what happens here is that there is one winner and there is one loser. And this satisfies the final problem within online forex trading. Because you do not use physical cash and you use a derivative, especially a contract, you have one winner, one loser situation. And this satisfies the final, this creates the final problem of MESA, one winner, one loser. So for the individual that asked me why I say retail forex trading or online forex trading is not permissible, it's simply because it does not satisfy all three components. And even if you do, you cannot use short selling, and you also cannot use margin lah. So these two components alone usually will turn off many of the forex. Whereas for real money, when you go to the foreign exchange, you're using cold hard cash and you're not taking a loan, so there's no riba element in the first place. Because you're using cold hard cash, there is no gharar element because you're holding the ownership. Or even if you use your bank account money, you're holding ownership, so there is no gharar there. And there is no one winner, one loser situation, because this is not a form of a contract that is locked into a ecosystem. You are just mainly changing your money from one version to another version. The bank carries the other version. So I hope it clarifies to whoever's a forex trader, or not even just forex, like if you're a stock trader or stock investor, or you want to hear about options, anything, stay away from them. If you are in terms of Sharia permissibility, options, CFD, futures, Binance futures, or whatever. I've heard so many different ones, but I hope this will clarify the doubts. And Allahu Alam, I hope you have learned a bit more about why I believe forex trading or options trading or so on and so forth is impermissible in the general sense. Yeah. Thank you, Adil.
Right. Thank you so much, Daniel and Murtadha, for the talks tonight. I think both topics have been very beneficial for everyone to get us started on our journey on investing. So moving on, can we go to the slides given? Okay, so for the next slide, we just need a bit of feedback from everyone. So it's just a QR code. You can just scan it quickly with your phones, and yeah, you can just give us some feedback so that we can improve on our future events. Okay, moving on. All right, we are going to do a photo taking. So please just turn on your cameras for a few minutes, and yeah, we'll just take a screenshot of the photo so that we can post it. Kevin, you okay?
Yep. Okay. So I know it's a little bit late for everybody. So I just get everyone to turn on your cameras just for maybe the next 30 seconds, and then inshallah I'll take the photos. Whether you're on portrait or on landscape doesn't matter. We'll find a way to work it out so that everyone's facing the right way up. Okay. All right. Okay. So we have enough to fill up one page of our gallery view. So we're just gonna go ahead with the photo. Okay, everybody smile. 3, 2, 1, smile. All right. Okay. Thank you, guys. You guys are part of MS and IBFS history.
Okay, thank you everybody for coming to our talk today. Before you all go, you can go to the links that we have posted into the chat group, and you can go and join the community with Ashik Duitja, which is led by Daniel and his friends. Or you can even meet up with Abang Insurance, which is Murtadha's Instagram name on Instagram and also on LinkedIn. So can you go to the next slide, Kevin? Right, yeah. So if you would like to connect with me and Kevin, these are our details. You can just go to our Instagram page, you can email us, or you can even go to our LinkedIn's. With that, I would just like to say Assalamualikum warahmatullahi wabarakatuh, and good night to everyone who has joined for our event today. Goodbye, everyone.
Bye-bye. Thanks, everyone.
Bye.
Thank you.
My Raya vibes came too late.
Hey, thank you so much, Daniel Murtadha, for the talk today. I think it was really beneficial for everyone to get their journey started.